Morning, welcome to the TRG Money Minute. Last week we had the International Monetary Fund cut the global growth outlook. They cited trade wars as well as a weaker Europe for the reasons for this. Looking at South Africa, they cut the growth forecast on our economy to 1.4%. Our South African Reserve Bank still has that forecast at 1.7%. China also released their growth numbers last week, showing the economy expanded by 6.4%. This is still very strong but has been slowing a bit. China is important to South Africa as demand for our commodities fuel their infrastructure spend, which they have been reducing a bit in recent times. We also had a barrage of South African retailers releasing updates last week, revealing just how tough the conditions are out there. And lastly, we had inflation was announced at 4.5% for December, which is really the midpoint of the Reserve Bank's 3 to 6% interest rate range. This was due to a stronger rand as well as a big decrease in the oil price. Low inflation is good news for us as it makes further interest rate increases unlikely, and food inflation also slow. With the week ahead, we recap what happened in the World Economic Forum in Davos, and there the conclusion was that from political and business leaders that while the global economy is slowing, it's not slumping, but risks are mounting, with politics being a particular big threat. Economists are also looking ahead this week for data that could evidence if our local economy is improving, but expect a mixed bag from producer price index numbers, trade balance, and new vehicle sales. The Cabinet's holding a 2-day Lekgotla. Here they're going to outline government's priorities for the election year ahead, but Zimbabwe and the crisis in Eskom is expected to dominate the discussions. And lastly, trade talks between US and China are expected to continue this week with the delegation going to Washington. This is crucial as financial global markets turn their focus to that and what the impact of it will be. Have a good week.